All right, stock market, projections on the S&P 500 and more. First, see this important information. Do read this slide. It tells you about how we approach the markets and what that means for you as you use our information. Stock market, S&P 500. Compelling look at the tech leaders, and we'll look at the NDX and SPX weekly, and we do believe that there is trouble ahead. Now, we've talked about the coming peak in the stock market that we expected to see in the August timeframe, thinking it would be around the second to third week of August. This decline in the stock market is extending a little bit longer than we expected, and that is giving us some indication that a coming rebound, which we think is going to come in the next week or so, is going to be shallow and potentially fail pretty quickly. So while the market is likely to try the upside and get some bounces, there is trouble ahead, and we want to present that as we look forward. Let's start out by looking at the NASDAQ right over here, and you can see that that NASDAQ chart is pointing at what I'm pointing at right over here is the downturn in momentum right there. So this is cycle analysis. On the bottom are the cycle brackets, and the cycle brackets are showing you a minor cycle, and you can see how that resolves itself right in here. This is called the translations from the ideal cycle, timing translations, and right in here a super strong translation, and another rally is expected, but now we're getting into this corrective period right in here, and this is where the trough timing is between these two timing lines right there, and the expected decline is out here into late September to early October. Now, this is our reversal scalp. You can see that it turned up over here way back at the beginning of the year. This is the second week in January, and this is kept positive this entire time, this entire year. Even in this time of minor correction right there where it fell for about a month, this never turned negative. But now you can see you get a downturn right over there, and that is really important. And this points to a declining market here through the end of September, beginning October. Now, there is likely to be some attempted bounces in here, but now we don't think they'll get back to this level anymore. That engulfing is very significant. That came up to and just above that 161.8% fib extension, important level where it failed from, and now is moving to the downside. Again, expected upside and then moving back to the downside. So this is a sign that there is trouble. It's because you've gotten all the way down to this 23% already and this 13-week moving average, it is much more likely that the downside will take you here down to levels of about 14,003 to about 13,008, and you can see this 34-week moving average coming up right over here, and by the time you get to October, it's going to be up near this level there. So 13.8 might be a reasonable target on the downside, about 1,100 more points in the S&P 500. Now let's compare this to the key stocks that we look at. Let's look at Apple first, and you can see that, of course, Apple, the heaviest weight, is important to understand looking at this. So you can see the same thing has happened, and that is that upward momentum right there that occurred at the beginning of the year, and the strong momentum based on our reversal scout. If you want the reversal scout, you need to become a level 4 member and apply this to the Thinkorswim platform. And here is that downturn there, and there is a daily cycle. That's on the daily chart that points early October as a trough. And again, we're looking on the downside. It's met the first area of support there, but it's very likely to get down to 171 to 165 as those support levels coming out here into late September, beginning of October. So Apple gives you a very good sense that it is correlating with the analysis that we see in the stock market, looking at the NASDAQ. Next one we will look at here is MSFT, that is Microsoft, and you're going to see something similar here, looking at these cycle patterns. And this one, well, it's not similar, it is worse, because you had a very strong condition that we showed as this moved up right over here. Here's where momentum turned positive This was right again at the end of January of this year, and then it moved up, and this started to turn down a little bit earlier than the rest of the market. That was right here on that earnings report where it left this huge shooting star and began to move down. Now this looks like the low is formed right in here, and then you have this momentum downturn. So this minor cycle is in the middle of October. That would then point to a much lower low sometime out over there into the beginning of the year. So Microsoft is even a worse chart. And what it says to us is that there's likely to be some attempted upside moves in here. They will offer selling opportunities and very likely to be moving down again into October, into this minor low right over there. You can see the difference. This positive cycle right over here and this right over here, this very early negative failure, very much looking for downside here in Microsoft after any upside attempts. Of course, really bad for the stock market. When we look at that, and the last one of the big leaders, one of them that has really driven the market up very much based on AI and the sale of those chips, which really hooked a lot of people, if you ask me. It gets up to 480, and now it's trading at 409, so it's given a lot back already. Look at the momentum downturn right over there. The same timing here, January, it remained bullish through this whole period, and now what we're looking for is a decline over here into October again. So all of this is in alignment with that period of risk that we're talking about as we look at these three major stocks that have been basically the ones that have really led the market to the upside. That's why we focused on this, and especially with RV looking at the SMH this week. If you haven't seen that, go back and watch that SMH analysis and the bearish trade setup that he is looking at, and that is very much in alignment with what we are looking at. So let's go back to that NASDAQ again for one moment, and you can see in here that downward turn, the cycle that points to this decline out into this area in late September or early October. The downside in here that we're looking for, and the look here at the SPX, which is the S&P 500, and that period of risk that we have been discussing. And let's just look here at these last periods of risk and how important they have been. And you can see right over here the period of risk way back in a year ago February, right in here, how it brought that big decline. This one over here called for September to October of last year and that big decline. This one over here called for January to April and that big decline, and just getting into that right now. Again, we had looked for the short-term patterns to bring it up to test these levels, but this engulfing pattern right over there and the extended weakness on the daily charts and our daily analysis that we look at is warning us that this is going to continue on the downside with only some minor attempts to the upside. I want you to note in here, the reversal scout has not turned to the downside yet. However, the shorter term momentum indicators have turned to the downside, and once this moves to the downside, this will be indicating that there is trouble. Remember, you can use our market condition monitor to get the information in all of the different trading styles that may be out there, and that really would help you. This points to trouble ahead for the stock market through late September, early October, only some feeble attempts to the upside, and then likely reversing, as we have seen, back to the downside. Period of risk, well, it's right now, and we'll only look for some minor attempts to the upside. Get ready to have your selling trigger on when you see some upside movements in the market. I think that is the highest probability. We can always be wrong, but I think our analysis gives you a continuous edge in the market, understanding the momentum conditions, directional conditions, and of course, using our cycle analysis and proprietary indicators. You can get so much of that by becoming a level 3 member. Don't miss this opportunity. Just go to the top of the askSlim website and click that sign up now. That'll give you a lot of information on that page. And if you didn't watch it, go to the beginning of our show and I did an extensive look at what's included at the 10 different reasons, 10 different pieces of analysis help for you that you can use by becoming a level 3 member. 35% off or 50% off if you take a 3-month trial or a 1-month trial. Just fantastic.